Let's take a look at doing an example of a bank reconciliation. And here they break it down into 3 different steps. And we're using Mary Adams Consulting, which we have used in some other situations. Now, in step 1, we're taking a look at deposits. So we're going through all the deposits, we're comparing them to from the bank statement, we're comparing them to the check register because every deposit that we have written in the check register should be also cleared on the bank statement. And we're looking also to check to make sure that the amounts match. Okay, so that's step 1, is to check all the deposits. Now they're starting out with last month's deposits in transit. So these are deposits from last month's bank rec that we had put in as deposits in transit, that they had not yet cleared the bank at the end of last month. So we want to start with that and make sure that they did clear on this month's bank statement at the beginning of this month. If they didn't, there's a serious problem. We need to investigate it. We're also checking again any deposits listed in our check register and in the cash account of the general ledger, which those two should equal each other. Okay? And we're going to go through all of those deposits on the check register, and if we don't find that it cleared on the bank statement, then that deposit is considered a deposit in transit. We're also going to check all the dollar amounts for the deposits in the check register and make sure they equal the same dollar amounts on the bank statement. And that there isn't some kind of error. If they're different, it shows that the deposit was made, but if it's a different amount, we need to find that error and it needs to be corrected. So here is an example for our bank reconciliation for Mary Adams. There was a deposit in the accounting records, that's the check register, of $635 dated October 31st, and it was not on the bank statement. So this is what we call a deposit in transit. It's a deposit, it's a cash that was debited or received into our records. The books know about it. The bank does not. The bank statement, at least, does not know about it, so it needs to go on the bank side of the bank rec. And, of course, because it's a deposit, will need to be added. So here is the beginnings of the bank reconciliation that we had started in the previous video, showing our bank statement balance from October 31st. That was $43.50. And adding and subtracting stuff that we're going to do till we get down to the true bank balance. Then we start the book balance as of October 31st, which was $3,800, and we're going to add and subtract stuff to there to get down to our true book balance. And of course, the true bank balance should equal the true book balance. Now here we have a deposit on transit. We said that's where deposit in transit is where the bank doesn't know about it. So here's our bank part on top and our book part on the bottom. It doesn't matter if one's on the left side and one's on the right side. It doesn't matter if the book's on top and the bank's on. It doesn't matter how you put it. It's just as long as you have the two sections. So the bank statement doesn't know about the deposit in transit, so it's going to go on the bank side. And since it's a deposit, it needs to be added. When we go to add it, we're going to also put the date that the deposit was made, which was on October 31st. and deposit in transit. If we also had another deposit in transit, maybe from October 30th, we would list that date and that amount also. So here's our one deposit in transit from October 31st, $635 is now on our bank reconciliation. The second step is to go through all the checks. So once again, we're going to compare the bank statement to the check register. Now, all the checks that cleared the bank are listed on the bank statement, even if we don't get the canceled checks with the bank statement. They'll still all be listed by check number on the bank statement. And we're going to look at the check register, and we have personally listed all the checks that we wrote out are listed in there. And so we're going to compare those two. Okay, if there's different amounts, then that's an error and it needs to be investigated and corrected. Okay, if a check is on the register, but it didn't clear the bank statement, then that is what we call an outstanding check. And it's the bank statement that doesn't know about it, so it's going to go on the bank side of the bank rec. And since it's a check, it'll have to be subtracted. So here's part of our example where this is an error. Check number 862, payable to XYZ Telephone Company, was written for $46.25 originally. And that's what it cleared the bank. But we accidentally put it on the books in the check register as $64.25. We transposed these first two numbers accidentally. Okay? So whenever there's a difference between the check register, 64, and the bank statement, 46, we have to investigate whose error was it. In this case, we found out after we investigated that it was our error. It was an error in the books. And so therefore, whenever we know there's an error, once we figured out whose error it was the book's error, then this is going to have to go on the book side. And what we're going to do is we're going to take the 64.25 minus the 46.25 to find out the difference between those two numbers, and that's what's going to have to go on the book side. So 64.25 minus 46.25 is $18. We have an $18 error, and that's going to have to go on the book side. So here's our book side on the bottom. Now we have to figure out whether we're going to add or subtract that $18. So if we go, what we did in the books is we subtracted, this was a check, so it was being subtracted in the check register of $64.25. We were supposed to have subtracted $46.25. So we actually subtracted $18 too much. So we need to add the $18 back in. So on this bank rec, we now know that it needs to go on the book side, and we're going to have to add that error back in the $18. Now, if it was the opposite, if the check was for $64.25 and we put in our books $46.25, then we had not put in $18 enough. We had not subtracted enough. Then we would have to put this error down here with the deduct section. We would have to subtract the $18. So when you're dealing with an error, you have to first figure out what side it goes on, and then secondly, whether you need to add it to make it right or to subtract it to make it right. Okay. Now we're going to go through the check register to look at all the checks, and we're going to put a check mark next to each one to see if they cleared. Now, if we have software, accounting software, it will do a bank rec for you, but you still have to do this. This piece still has to be done. You have to go onto the software and bubble in every check that's on your check register that also has cleared the bank statement. Whatever checks are left over that didn't get checked on the check register because they didn't clear the bank, those are called outstanding checks. And because the bank side is the side that doesn't know those checks exist, they are in the check register, they're just not on the bank statement. So the bank statement doesn't know about it. That's the side it's going to go on, and it's a check, so it's going to need to be subtracted. So here's going back to our example. We have check numbers 890, 892, and 893. They don't appear on the bank statement, but they are on the check register. So these are outstanding checks. They're going to have to go on to the bank side because the bank side doesn't know about them. And they're going to be subtracted. So they're on the deduct section. Now, when we put in the outstanding checks, we're going to put them in by check number. We're going to list each check number and its amount, and then we'll total them up. So there's check 890 for $598, number 892 for $334, and 893 for $795. Now those are the three outstanding checks. Now we're going to total them up and put the total over here in our summary column, $1,727 of outstanding checks. Now the third main step, the first step was to go through all the deposit stuff. Second step was to go through all the check stuff. And now step 3 is to just go through everything else that doesn't match between the check register and the bank statement. Okay. So anything that's added by the bank that's not on our check register might be called credit memos by the bank. It may or may not. They may have other names, but sometimes that's a name that they'll use. If it's deducted on the bank, it might be called a debit memo. Okay, so here's an example of something that might be on the bank statement but isn't on our check register. Mary used an ATM machine to make a withdrawal from her account for $200 for personal use. However, she forgot to record this withdrawal on the books. Okay, and so it's on the bank statement. The minute you stick your ATM card in the machine, it's taking that money out of your account. So the bank knows about it. It's the books that don't know about it, so it's got to go on the book side. And it's money that came out, so it's going to have to get subtracted. So here we are on the book side, just down at the bottom. We're in the deduct section. We put unrecorded ATM withdrawal, $200. Here's another thing. The bank returned an NSF check of $350 written by one of Mary's clients. As we talked about in the previous video, an NSF check means a non-sufficient funds check, which one of Mary's customers wrote Mary a check for $350. Mary thought it was good. She accepted it. She deposited it into her bank, and her bank accepted it, and they added it to Mary's account. Well, then come to find out, when the check was sent to the customer's bank, it came back as being non-sufficient funds. So the minute that Mary's bank got it back as a bad check, they pulled that $350 back out of Mary's account. And now with the bank statement, Mary is just finding out now that there was an NSF check. Okay, it's the book side that doesn't know about it. Like I say, as soon as the bank found out about it, they pulled it out. Okay, so it's the book side that doesn't know about this $350. We'd originally put it in there, and now we got to pull it out. So it's on the book side, and it's in the deduct, subtract section, NSF check, $350. Here's another thing. Okay, the bank went through their formula and figured out that Mary's owes $10 for service charges. Well, the minute they figured out the $10, the bank took that from her account. So they already have that. They already know about it. It's us that doesn't know because last month it was $12. Maybe it'll be $8 next month. Whatever. It changes from month to month, depends on the activity. And so Mary has not put it in her books yet. So we need to put it in the book balance, and it was a service charge subtracted, so we need to subtract it. So it's in the book side, under deduct, bank service charge, $10. Okay, so now we're going to start totaling up. This was all of our stuff. We went through the entire check register and checked off everything that was also on the bank statement and vice versa. And now we circled everything on the bank statement that wasn't on the check register, and we put that on the bank rec. And then we went through all the check register, and everything that didn't have a check mark we circled, and that is now on the bank rec as well. So we've now taken care of everything, and now we can total stuff up and see if we balance. So we're going to take the bank balance from October 31st. We're going to add that deposit in transit, subtract the outstanding checks, and that's going to give us the true balance, $32.58, the true balance of according to the bank. Now we'll go to the book side. We started out October 31st in the books, it said $3,800. We had to add the $18 error, and then we have to subtract the total of these other odd things down here, which total up to $560. So I take the $3,800 plus 18 minus the $560 of stuff we're deducting, and that gives me the true cash balance of the books. Now I want the true cash balance of the books to equal the true cash balance of the bank, and yes, it does. So I feel good. Now, if it doesn't, you need to go back and find out. There's either something you forgot to put on here or something that you added when you were supposed to subtract, but you've got some kind of mistake, and you would have to find it until this balances. We now know that the true balance is $32.58 from our bank rec, but the general ledger cash and the check register still show $3,800. A bank rec is not the books. Okay, the general ledger, the journal, and the ledger are the books. So, and they still say $3,800. So we have to put some journal entries in and then post them to the ledger, and then also go into our check register and put stuff in there until we get the $3,800 down to the $32.58 true balance. We need journal entries. That's the books. Okay, so every item in the book section of the bank reconciliation needs to have a journal entry. We have 4 different things in the book section of the bank rec, so we will need 4 journal entries. Now, we don't put any journal entries for the stuff that's on the bank side of the bank reconciliation. Those things will take care of themselves. So the outstanding checks, they'll make it to the bank eventually, they'll clear. The deposits in transit will clear, etc. So we don't need journal entries for that. We want to just have journal entries for the book side. We need to get the books from the 3,800 that they're sitting at right now down to the 3,258. Once we post those journal entries in the ledger, then our cash account ledger should equal that adjusted true balance on the bank rec. If it doesn't, then maybe we did something, we messed up one of these journal entries. We need to fix it. Okay, by the time we get done posting, it should equal in our ledger 3,258 for the cash account. We also need to fix our check register so that it also equals 3,258. Now, when we're doing these journal entries, if we have anything on the book side that is an addition to cash, that means I'm increasing cash, which is an asset, which means I need to debit cash. So every addition that's on the bank rec, automatically we're going to debit cash. And all we have to do is figure out the credit side. For everything that's a subtraction to cash on the bank rec, that means we're decreasing cash, we're decreasing an asset, and that's a credit of cash on the journal entry. Okay, so we automatically know if it's an addition, we need to debit cash. If it's a subtraction, we need to credit cash. And then we just need to figure out the other part, the other half of each journal entry. We know half of every journal entry that we need to make. Now, going back to our bank rec that we had figured out, the 3,258, here's the book side down here. We have 4 things that we put on: this error, the ATM withdrawal, NSF check, and the bank service charge. These 4 things are on the book side. I will need 4 different journal entries, one for each one of these things. Okay, now the first one was this error, and it's an addition. So I automatically know I'm going to debit cash for this $18, and I just have to figure out what the credit is. Okay, so here I'm debiting cash for the $18. Okay, now I have to figure out, well, what am I going to credit? Well, whenever you have an error, you need to go back to the original journal entry. So when we originally wrote that check for the $46.25, okay, that we accidentally put in as $64.25, we originally wrote that was to the telephone company, and it was to telephone expense. So we have to now credit telephone expense. So every time you have an error, you have to go back to the original entry and find out what account was involved besides cash. And that's the entry you need to put in this journal entry. So here I'm going to credit telephone expense for the $18. Now my debits equal my credits, and I can put my explanation in, which is error on check number 862. Now the next thing that we had on the bank rec was the ATM withdrawal, and it was a subtraction, so we automatically know we're going to credit cash. So we just have to figure out the debit. Well, we were told that the ATM withdrawal was for personal expenses of the owner. So this is an owner withdrawal. So we're going to look on our chart of accounts, and we see that MA, drawing is our owner withdrawal account, and that's what we're going to debit. And of course, like I said, we already know that we need to credit cash because we were subtracting it on the bank rec. Okay, in this one here, this was our third one. This is the NSF check. for $350. It's a subtraction, so we automatically know that we need to credit cash for $350. What do we need to debit? Well, this customer gave us a bad check. So they came in the store, they left out of the store with products, and they gave us a check in exchange. Well, the check was bad, so it's like they gave us nothing, okay? And so they owe us the money. When customers owe us, that's accounts receivable, okay? So we're going to debit accounts receivable for the $350, and now we'll start trying to call that customer, trying to send statements. If we have to, we'll send this to collections. We hopefully, get a hold of the customer, and maybe they just had some kind of issue and they are going to pay us, okay? A whole year goes by and we put it in through collections and we never get the money, then in that case, it'll be written off as a bad debt expense at that time. Okay, but for right now, we're going to assume that the customer is going to pay us. Customer owes us, so we're going to debit accounts receivable. Now, for the final one was where we had the bank service charge. Again, it was a subtraction, so we automatically know to credit cash. So what do we want to debit? Well, we're going to look again on the chart of accounts for this company. Some companies have an account called bank service fees or bank fee expense or service charge expense, something similar to that. And some companies say, oh, it's just a little tidbit of amount, so we're not even going to bother having an account for that. And any little stuff is just going to go into miscellaneous expense. So it just depends on the company and their chart of accounts. Now, Mary Adams, she doesn't have a bank service fee expense, so we're going to use miscellaneous expense instead as our debit for the $10. Once we post all of these, and we have our little post reference account numbers in our post reference column, once we post all these, then our cash, our running total balance for the cash account should be $32.58. We have to then go into the check register and make sure all the